Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Dominic Konstam with us, and just absolutely definitive, as Paul gave us wonderful perspective yesterday of Credit Suisse at Madison Avenue 23 years ago. The foundation that Neil Sauce did at Credit Suisse was a research of Dominic Konstam, surrounded by people like a young Turk, Ira Jersey, who now runs all of Bloomberg Intelligence Fixed Income. Dominic Konstam has the chart that has shown how wrong we have been for how long. It is the hair chart. And you take the interest rate, and then you forecast out what you think yields are going to do, and the whole racket always feels yields are going back up, back up, back up. And they look like wisps of hair on a chart. And for the most part, they've been wrong, wrong, wrong. What does the hair look like into 2025?
Well, the hair for a while, for the last year or two, obviously has had the market sort of begging for rate cuts from the Fed, and the Fed pushing back and back and back. So now we're sort of having another go at that, where basically the market's obviously deeply discounting Fed cuts, going under 3% in the year or two. So we'll see if the markets are wrong again. But obviously we're expecting the Fed finally to open the door to a fairly aggressive easing cycle. And so we would expect them to pretty much validate what the market is doing for the first time.
What's the Fed really looking at here? A lot of folks are saying that it's kind of moved away from its focus on inflation and maybe looking towards just economic growth, labor, that type of thing. What do you think they're really looking at these days?
Well, I mean, I think it's very clear, and Powell, for people who sort of dig deeply into the data and the Fed mindset, I think Powell's Jackson Hole speech was very profound. He basically took work that Governor Waller had been doing a year or two earlier on the labor market, and basically you look at the COVID labor market, you look at the pre-COVID labor market, you look at what has changed and normalized or hasn't changed and has yet to normalize. And it's that sort of normalization process that is creating great concern. The idea that, for example, layoff rates are very low still. You want to go back to pre-COVID layoff rates for a normalized labor market. And as soon as you do that, the trade-off between, for example, vacancies coming down and unemployment going up, that trade-off really deteriorates. So when the Fed is saying we're worried about the labor market, or we're looking at the labor market, it's not that, unemployment is 4.3%, that's not a bad number. That's not the point at all. It's the idea that if there is a further slowing in demand for labor in terms of vacancy rates dropping, the rate of increase in unemployment could accelerate, and the Fed could easily be facing a 5 or 6% unemployment rate. That's what they're focused on.
So if you were to go down that route, it would suggest maybe the next argument would be the Fed's late. They should have already been cutting rates. Are you in that camp?
Yeah, I mean, I think it's risk reward. Yeah, absolutely. I think they should be cutting rates, and they should start with a bang, not a whimper. That means 50-50, not
but
a 25.
Maybe the recent data took that off the table.
But
the CPI.
if you're going to look at if you're going to look backwards, or the current data set, which is backwards, then obviously you're going to start with a whimper. But that's not necessarily the right thing to do. But Waller said last week, if they need to accelerate, they will. And I think they'll need to accelerate. Basically.
We're math free on Thursdays, but let's go there. I'm sorry. There is a codified belief that a measured approach leads to a better anchored expectation out, where it gets almost an inertial force. I'm talking Newtonian physics jealousy here, folks. There's almost an inertial force, a weight advantage to being measured. Do you buy it, or should we be more like the world of Arthur Burns and do what we believe in, have a conviction?
Well, I guess, if you want to start, with a measured approach, and as long as you credibly commit to an accelerated sort of willingness to accelerate and become, if you like, less measured, then yeah, sure, you can do that. The Fed kind of did that with the inflation fight. They started with 25, they went to 50. Before you knew it, they were doing 75. And was that so damaging? Well, maybe with hindsight, it wasn't that bad, and they did get inflation under control. So yes, you could do that. I think it would be equally fair to say, though, it's almost like a smile, where if they're so sort of soft and, for example, didn't even cut rates, that would be an absolute disaster in the first place. And if they were so aggressive and started with 100, yes, that might be a disaster as well. It might panic people. So somewhere in between is where they're going, and it's a natural choice. Yeah.
My take on this, Paul, is we presume we have a crystal ball. Yeah. It's all there. It's just math envy, and
I don't know.
I have trouble with it.
Yeah. Ira Jersey, I don't know. Real quickly here, we have a little bit of a look back now. We have a couple of years to kind of look back at inflation. Where did our inflation come from? Because that was a wicked bout of inflation we had.
What are you in the debate last night with Trump and
Maybe.
Harris 2 nights ago?
Inflation was really insidious this time. People try and compare it with the 1970s. 1970s inflation was not nearly as insidious, not only as people remember it, but also economically when you look at it. And where it came from was basically companies jacking up prices and selling the same stuff for more, but less of it. It was really kind of like supply-driven, controlling it. And in economics, we call that things like price discrimination. It's all this sort of dynamic pricing, which now is all over the place, where basically consumers are having their sort of what
airline tickets.
Yeah, exactly. Consumer surplus transferred to profit.
That's where it came.
That's where it came.
At London School of Economics, the price discrimination question,
right,
Paul, is airline tickets.
Yep.
Inflation is always and everywhere a monetary phenomenon? Absolutely not. That's what it isn't. It isn't always and everywhere a monetary phenomenon. It's partly due to corporate pricing acts, egregious corporate pricing.
But are they pulling back now? Do they go stable and help time?
We run a model that kind of looks at that, and you can show that the rate of increase in that, if you like, price discrimination has actually slowed down to a standstill. So we're taking a time out.
One of the hallmarks of Bloomberg surveillance, folks, good morning, listening and watching across this nation, is you get lucky when you have the right guest at the right time with breaking news. The ECB cut interest rates moments ago. That's not a surprise. That was widely anticipated. But the growth view, and they do this much clearer than the Fed, the growth view out to 26, looking at real GDP, looking at the animal spirit of nominal GDP, is absolutely stunning. Dominic Konstam is with us with Mizuho, with all of his correlated abilities here. There's a call for weak dollar. George Saravelos over at Deutsche Bank just said no. He said people are going to be surprised at resilience of dollar off of tepid EU growth, one of the reasons. Is that where we are now, where Europe's just not getting it done?
Well, yeah, Europe and the rest of the world, China, obviously.
Leading the way.
Yeah, exactly. There's a lot of disinflation and there's a lot of weak growth, and the US has been standing out as a sort of bastion against that. But to be honest, the US is sort of following suit in a sense. At least it will either need to make the choice between cutting rates very aggressively to avoid as much weakness in growth perhaps going forward, or it's going to sort of suffer that growth as well. So I would not agree with with the dollar staying strong. I think the dollar is going to weaken, and it's not going to be precipitous, but it will basically have to weaken. Otherwise, you can imagine the strength of our dollar would actually import a lot more disinflation into the US from places like Europe and China. So we don't really want that. As it is, our inflation is going to target. We don't want it to go well below target, which is what would otherwise happen.
Paul, within this caution on growth, ECB, wages are still rising at elevated pace. Domestic price pressures are still high. That's the tension here.
Exactly.
Into 2025.
ECB cuts growth forecast for every year through 2026, a Bloomberg News headline reads. So, Dominic, Mizuho's a Japanese bank. You're a macro strategy. Where are opportunities, if there are, outside of the U.S.? Where do you see opportunities just generally when you talk to your clients?
Well, in terms of the sort of fixed income base, obviously there's a lot of interest in the Japanese fixed income markets.
And where did that come from? Because for 25 years, Tom and I didn't even talk about Japan.
Well, I mean, the BOJ has been buying a lot of JGBs, so there wasn't that a lot sort of available, if you like, for other investors to buy. So there was always a sort of concern around liquidity in that market. Now the BOJ is stepping back its purchases. Obviously, they've reduced them a lot. Interest rates are also normalizing, so there's some sort of yield being generated. So yeah, it's becoming a proper market, and so people are definitely very much involved.
So when you go back to, I'm guessing you go back to Tokyo once, twice, 3 times a year to see clients, if not to just, say hi to your boss back there. What's changed in Japan? Again, when I started in the mid 80s, Tokyo was a tour of duty you had to have on your resume. And then after that, it fell off the face of the earth. Nobody talked about Japan. What's changed?
Well, I mean, it's become very international. I mean, I've been in the markets for a long time, and I've been to Japan many times. It's definitely become a very sort of international city. It's a very livable city.
Yep.
People are much more sort of open. It's also, believe it or not, very inexpensive. I mean, talk about the strength of the dollar. I mean, it's ridiculous. You can go to Japan, and it's very, very inexpensive, and the food is fantastic. So we love going to Japan. Yeah. Absolutely.
In the time we've got left, I think we have to turn to the United Kingdom. Certainly 6 months, 12 months ago, there was a shock that the growth was better than what everybody figured it would be. Is that a technology or productivity overlay? I have trouble looking for a constructive productivity story out of the United Kingdom. Am I wrong?
We're talking about the UK or the
UK?
Yeah. So. No, it's definitely a sort of productivity story. I mean, the technology is, very global, and I think, even Europe as well as the UK, they sort of mirror the US to some extent, in the sense that, we obviously have, productivity leading the way. Labor inputs obviously a little bit sort of modest, and it's a way, in a way, it's inevitable. I mean, in these developing countries, basically, when as you evolve, right, with very minimal population, that's where your living standards sort of basically go up. There's a distribution of that, which becomes the issue.
The distribution is the key, and in America we see that within the election process as well. Just to get this in as just one final question, Dominic Konstam, we are seeing interest rate cuts. Can they rescue economic growth?
Absolutely. And the good news is interest rates are so high that they can come down a lot. There's also the good news that balance sheets pretty much across sectors, household and corporates, are actually in pretty good shape. The government is obviously a slight issue, but basically that means you don't have the sort of hangover that you've had in previous significant downturns. So this is what I would call a regular cycle. You just need to get rates down, and things will be basically fine.
How's the Fed going to do that? Do they go every period, or Tom and I, do we have to sit here and predict which meeting they're going to cut, which meeting they're not, once they do start?
Well, I mean, they basically should just do it as quickly as they can, do 50 basis points every period. If they want to start with 25, then go to 50, that's fine. But by the middle of next year, we should be pretty much at neutral. I'd say around 3% plus or minus. Yeah.
Can we this year, miracles are going to happen. Look at the Mets. Are you kidding me?
How about that?
Mohammed had to be medicated last night. It was so good. Can we get you and Rashudo in together? I know you're not on speaking terms. But
exactly.
You and Steve Rashudo in together.
We'll talk to the people.
Would be really special.
I do lots of meetings with
do that. To do that for choice. Dominic Konstam working with Steve Rashudo at Mizuho. I can't say enough about it. Again, we protect the copyright of all of our guest research. Look to Mizuho for the work
stuff,
of Dominic Konstam. Joining us now after Jackson Hole, Nela Richardson, Chief Economist at ADP, on where we are right now. Nela, my head is a jumble. I guess we're getting CPI and PPI surveys correct, but is the vector of disinflation actually entrenched?
I would say no to that question. And thanks for having me on. You didn't see me get the root beer floats after the trout, but that's fine.
They were great.
Yeah. But yeah, I think that there is no foregone conclusion on inflation. The drivers of inflation, those long-term drivers of inflation that kept it low and basically asleep for almost 20 years before this big upending of the pandemic, are not in place any longer. So you're talking about demographics, globalization, those used to suppress inflation. Now they're a tailwind to inflation. And so, no, nothing is pre-committed, not even the Fed. And so, yeah, when we see a little uptick in PPI, like we saw today, a bit of an uptick in CPI, we have to be a little wary of what direction this is going to go over the long term.
Talk to us about the labor market, Nela. I mean, nobody has a better view to the labor market than the good folks at ADP.
She signs my paycheck.
I think exactly. Yeah, exactly.
It's like the dollar. Nela Richardson
signs the paycheck. Nela, how would you characterize this U.S. labor market these days?
I think it's okay. If I were to grade it, I'd grade it a B minus. I think it's pretty good. We've seen unemployment stay relatively low, under 4.5% is low unemployment if you look at historical levels. But we're seeing less dynamism than we've actually have experienced in the past. People are staying put longer in the job. The U.S. labor market is characterized historically by this really dynamic churn. And we're not seeing the churn now. People are playing it safe, right. Both employees. And that does worry me a bit. Also, the concentration of hiring has been really segmented in a couple of service providing industries like leisure and hospitality. And finally, manufacturing is just shedding jobs this year, taking a trend that we saw 6 months leading into the pandemic. So it's an okay labor market. It's enough to support consumer spending, but I wouldn't cheer it over a long horizon.
Okay, so why does Nela Richardson go to Jackson Hole? Why is she acclaimed at ADP? Questions like this. Nela, I need a dissertation right now on full-time versus part-time unemployment. The American tone is a full-time job is a real job, and a part-time job is for has-beens. Discuss what ADP sees in full-time and temporary jobs.
Well, we got to change that narrative, because what we're seeing is that more and more part-time, not full-time. In fact, we've seen a noticeable increase in part-time jobs. It used to be about 36% prior to the pandemic of all the jobs that we see, and we see a lot of jobs. 20% of the U.S. workforce we're seeing through ADP's payrolls. Now part-time jobs is about 42% of all jobs we see in the database. So people have changed, and the workplace has changed. People want more time. There's more opportunity to mix and match jobs based on your skill set. Remote work makes working multiple jobs easier. So it could be coming from the workforce preferences. It also could be coming from employers who have filled their bench with workers, but each worker may be asked to work fewer hours per week. So we're watching that very closely.
Nela, thank you so much. Nela Richardson with us with ADP. Just can't say enough about her analysis. In Europe, it's been different. I met Francine Lacqua, Paul. She was 12 years old. And they said, we have this intern coming in 3 years early. She speaks 7 languages. Yep. And would you just have a cup of tea with her? They wouldn't let me have coffee with her. And so Francine Lacqua and I looked years ago at European banking, and it was a train wreck. It's still a train wreck. Deutsche Bank, 10 years trailing, -2, -3% per year performance. Deutsche Bank, 20 years trailing, -3% total return. Lagarde just spoke about it in Frankfurt. Here with us now, Francine Lacqua, with her important conversation with Mr. Ursel of Unicredit, Italy, and a potential mating with Commerzbank, Germany. Francine, finally, are they going to act more American?
I mean, I think this is a dream of Andrea Urcel. Remember, he's ex-UBS. He was their star investment banker. He knows how to put a deal together. He's doing extremely well in terms of the cash they have. And he's always been wanting to create this cross-border consolidation, saying if you want to be a true bank for Europe, then you need to do this. The concern is regulators. The concern is labor unions. And of course, we don't have a banking union. You don't have a capital markets union. So this kind of shook up everyone when we found out out that he had over 9% of Commerzbank, but I have to say the future is pretty uncertain. I would say, Tom, that he would really, really like to be more American, because every time over the last 10 years that I spoke to him, he kept on saying like, the Wall Street knows how to do this, and he kind of wants to take them on.
I can't say enough. 20 years at Merrill Lynch, Paul, in London. This guy's the most American European banker. Francine told me that. We're at the Dorchester with an umbrella and our cocktails. Francine told me that years ago.
That's where you learn important stuff. Francine, what do we know from the regulators in the European Union about their willingness to think about this type of transaction?
So, look, for the moment, it's been extremely difficult. I would say it's practically impossible. It seems that this week there's more of a chance that this goes through. But again, you have to have the blessing of the board. I don't think Andrea Orcel, unless it's very, very appetizing in terms of price, would go hostile. I mean, he talked about it this morning. He spoke to us in the middle of trying to cobble together a possible takeover. He kept on telling me, look, there's an option of a full takeover, but for the moment, whatever happens, he'd be happy having a big chunk of this bank because he believes that the management is doing a good thing. But, again, on the banking union, we had Mario Draghi with his competitive report this week saying even if you don't have a full banking union, you need to be able to transfer capital from one country to the other. And so at least they could agree on that for the big banks, and that would make a difference for a cross-border merger like this. I
mean, Francine, 20 minutes ago, Lagarde mentioned this possible transaction, in a comment of the ECB. Do the institutions of Brussels and Frankfurt and Strasbourg, I think it is, I'm just trying to show her my map of Europe, it's like really good. Do they want these transactions?
They haven't so far, but they may be able to going forward. Tom, it's complicated because you have countries such as Germany and others saying, look, you can't have a common issuance when it comes to bonds. So actually, we talk about a European market that's extremely fragmented. So if you're a big bank, but you can't put money from from A to B, then how does it mean for client transfers? Things are moving. Things are changing. We had new capital rules also from the Bank of England's PRA today. You have a new commission. So there needs to be political capital. I would say there's something quite odd with one of the people that's on the board of Commerzbank that's also a very, very big trade union laborer. He was saying, look, we'd rather the French come in than the Italians, because remember, Unicredit also bought this little bank called Hypo-Vereinsbank, HVB, over 20 years ago and dismantled it. So sure, today it's profitable, but they lost a lot of jobs. And so there may be something in there that they want securities about how many jobs they have to keep. I'm not sure Andrea Orcel would like to do that.
Francine, off the radar, but you're so attached to this, I've got to ask, does Lagarde have the support after Sintra? Does Lagarde have further support at the ECB? Or is there a fractious debate behind the scenes that we don't see?
So look, for the moment, she does have support. Remember, she had this scathing review 4 or 5 months ago from economists in her group saying she didn't support the Economist enough. She's a board politician. She's a board negotiator. But there wasn't, there's still quite a lot of dissent on the governing council, something that Mario Draghi, her successor, didn't, or her predecessor, didn't have, because he was good at listening to everyone and then saying there's only one boss, it's me, and you do as I say. She tries to find the nuance, and so sometimes people feel that they can go against what she thinks.
Francine, we didn't have you on for Orcel in your interview on Unicredit. Francine Lacqua, it's London Fashion Week. That's really what matters. We know this.
Why am I not
Francine, the train wreck of United Kingdom fashion. I'm only bringing this up because John Tucker's Burberry is 42 years old. But how's the resurrection of Burberry going? This is a story you know.
All right, 4 p.m. on Monday, there's the catwalk. I'll be there to meet the new chief executive. Now, they actually found an American that comes from Coach, so it'll be very interesting what he sees as the future of Burberry. Is it going to go more mainstream? I mean, it's been difficult, and I wouldn't say it's difficult for all UK fashion, but it's certainly been extremely difficult for Burberry. I mean, they're even getting kicked out of the FTSE 100 in a couple of weeks, Tom. So this is a big deal, and we'll see if the former Coach CEO is able to turn this around. I
mean, Lisa Mateo's looking at the long quilted nylon trench coat in dollars, Francine, $2,400.
Nice.
It's almost like Burberry's underpricing themselves versus other UK and Milan fashion.
It depends on where you are in the price range. Did you see the story today, Tom, about the row by the Olsen twins?
Yeah.
I mean, I think their trench coats are like 3,000, 4,000, and they have direct investments from the heirs to Chanel and the heirs to the L'Oreal family.
Right.
So it'll be interesting. It's only worth $1 billion. It's a small, but is the quiet luxury trend the one that we have to watch out in 5-10 years? I think that's probably the question for Burberry.
So this is great. I mean, one night, Paul, it's a small bar. It's got a Pabst Blue Ribbon sign blinking outside. It's called the Carlisle.
Yep.
I'm at the Carlisle with Mrs. Keene, and these two girls sit down next to us with 6 other people. And all of a sudden, Mrs. Keene going, "Oh my God, it's the row." And they were complete class acts. I can just report, I didn't talk to them, but I can just report that the row, who are they, Francine? They're twins, right?
Yeah, they're the twins. The twins in the famous American TV series.
Yeah, total class acts. That's all there was to it.
Olsen twins? No.
The Olsen twins.
The Olsen twins.
Yeah, thank
nice,
you.
Paul.
Mary Kate, and what's the other one? I don't know.
Ashley.
Yeah.
Okay.
Okay,
Ashley.
Francine
Well,
Lacqua.
I'm here to talk regulation. I end up talking fashion. That's such a
That's what we like.
Keene
That's how
move.
we don't
Surveillance London fashion queen, Francine Lacqua reporting. Your daily look at the front page is Lisa Mateo hours. She works a 28-hour work week. Lisa, what do you got?
Okay, we've been talking, right, about the first ever commercial spacewalk. So I want to start there. Okay, because the Wall Street Journal had this great look at the spacesuits that you were seeing. If you were watching on YouTube, you saw it. They were wearing the SpaceX developed spacesuits. They hope will eventually be used on Mars. This is the first time they've been untested in orbit, so they're trying it out. They also had the Crew Dragon, the SpaceX's low Earth orbit vehicle. So between the spacesuit and the new vehicle, a lot going on with the
I was just noticing the spacesuit on the video that we were getting looked very cool. It was kind of fashionable a little bit, as opposed to the stuff we remember from NASA back in the 60s, which these big, bulky types of things. These guys could move around a lot easier, it seemed like, and seemed pretty cool.
They could. And you have to check out the pictures of it.
Natick Labs, outside Boston. You go out, there's a thing called Natick Labs. And that, we make jokes about Tang, and I mean, understand Tang is the vitamin C of the astronauts.
Right.
But the U.S. Army Natick Labs were I'm not saying they did the spacesuits, but people forget about that. Like, okay, what's the fabric? What are they going to eat? What if they throw up? Landing on the lunar module? What are we going to do in weightlessness if they did?
And they
If
did.
they throw up. I mean, all this stuff is granular, and it's the many Natick labs around the nation. That's great.
Great
What
stuff.
else?
And you don't think about that. Also, SpaceX keeping the FAA busy, the FAA's Commercial Space Transportation Office, they said that SpaceX is getting the majority of their resources. 80% of the overtime that they log, which is hundreds of hours a month, goes to SpaceX. They say some of the delays you've heard about the Starship, they've had different delays. They say it's because of changes the company made to the scope of its flight plan, also ongoing environmental review. SpaceX, though, it blames them for the lack of resources. That's why they say there have been some delays, but the FAA made it clear.
Try getting into Newark Airport on a Friday afternoon and talk about the FAA. SpaceX can take a backseat to me. I'll tell you what.
I was sitting there in the emotion last night of September 11th, thinking thanks to everyone.
Yep.
Lisa, you were great yesterday. I got this really privileged deck that I'm on, and there was a 747 Lufthansa coming out of Newark.
Yep.
With the sun setting. It was spectacular.
Yep.
Newark is Newark. It's like, what did you say once you said it's like an aircraft carrier?
Yeah, that's right.
Next to the Jersey Turnpike. What do you got, Lisa?
Okay, so Paul's been talking about the iPhone, right? The latest iPhone. He's going to get it, right?
You can pre-order Friday.
You can pre-order
I walked
Friday.
into the Verizon store on Lexington Avenue, and that's what I was told.
See, okay, so he's going there Friday.
Yep.
But some bosses, they're using low-tech gear to show off their power. Things like pagers, the brick phone.
Yep.
Those are coming back.
I
The
could just
reason
borrow
why
Tucker's.
Yeah, John Tucker.
John Tucker can pull it out, yes. The reason why they're going old school is because they say they want a digital detox, right? They don't get emails and things like that on those kind of phones, so it gets them to kind of separate. It's also this sense of power because you think about it, only a big shot can say, page me.
Right, right, exactly.
It's this power trip. They're saying it makes them better leaders because they can be fully present in meetings instead of being on their phone and not kind of paying attention, getting distracted.
Yeah, we were talking about the hours of junior bankers back in the day. One of the reasons we had to be in the office is there was no technology.
Right.
My bosses, they couldn't reach you. They couldn't zip a file to you and say, upgrade this model. You had to physically be in the office at your computer, which, by the way, were new at the time, back when I was in the day. But now with the technology, boom. You don't need anything. You can be anywhere, as we've learned here.
Yes, and they can get you at any time
yes,
of the day.
Yes, they
can. That's the other thing. NFL opening weekend, huge. Highest on record. NFL averaged 21 million viewers per game during its opening week. That's a 12% increase over last year. So if you break it down, what network kind of, came out on top? NBC. You had the Kansas City Chiefs beat the Ravens. You had the Detroit Lions and the Rams. They were both pretty close games. So NBC came out on top. We had second. There was Fox. Tom Brady's first game as an analyst.
How did he do, Paul? Did you see that?
Yeah, the reviews were mixed at best.
Okay, give him a shot.
Yeah, give him a shot.
He's just starting.
He just started. He'll be fine.
He came in for the Patriots. I remember the afternoon, and when he did his first game with the Patriots, he was not mixed as best.
Right.
I was like, who is this guy?
Exactly.
Yeah, one more quickly.
Yes.
Quickly.
Okay. So people were asking about Happy the elephant at the Bronx Zoo. Everyone's worried. They haven't seen Happy. Happy's disappeared. I got to end you with a kicker, right? So Happy, the Bronx Zoo has responded. Happy is fine. Happy just doesn't like to come out of its enclosure, likes to stay in the barn and get fed and special treats, only comes out when people aren't there. But there were a lot of questions about it because there were some issues with it. You had the activists who were saying Happy shouldn't be enclosed, Happy should be out in the
public.
public.
Where do you want Happy to be? I mean,
Happy, they're saying Happy should be out so people can see her or him. her,
okay.
50-year-old.
Does she have pronouns? Okay.
Lisa Mateo with the newspapers. Thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.